We will start momentarily. So as I said, Dimitri will be answering your questions via text, but I prefer if you hold your questions toward the end. I'll try and make everything clear as much as I can, but it's 1 hour, including the Q&A at the end. So I will go through the important stuff, and then we could, you know, work on the Q&A and the final offer at the end. Hopefully you enjoyed. Let's start. I will not be looking at the questions if you folks don't mind, or maybe I will, but I would not answer them directly. I will let Dimitri take care of it. Now, I prepared a slideshow. Usually I don't, but I prepared a slideshow so I could keep it organized within the hour. Starting with myself, folks, I started in 2001 with Forex, but switched to futures Forex, the FX market and the futures market, and then completely to futures afterwards. In 2005, and this is where basically I became known, and I still have students with me that they join me in my daily room, believe it or not, from 2005. That is almost 12 years now. And I remember my first seminar I did outside. I didn't have a webinar then. It was done via classrooms. It was about October or November 2005. And I have students from that class and thereafter still with me 12 years after. Okay, so it means I'm loyal to my members, persistent. I've gone through a lot of changes throughout this business, and you know how tough this business is. Not too many people can say that they've been doing the same thing, supporting their customers for the past 12 months in a trading room environment like I did. So in 2005, I spent 6 months, folks, 6 months working on something I discovered then, which was, if you see this, the bid and ask ladder, this is not the subject today, but this is how everything started. So I worked on this bid and ask ladder, trying to understand these numbers. This is a crude chart for 5-minute bar. So from these numbers, I discovered a lot of things. After 6 months of locking myself in a room in my office, really 6 months, all I did about 16, 14, 15 hours a day was looking at the numbers, drawing formulas. And from my scientific background, this is something I really enjoyed, but it was tiring. However, I discovered a price magnet, which was a formula that was discovered within the tape, the bid and ask ladder that I just showed you, and we still use that. The price magnet is an indicator that you will receive as a member if you join us. End of buying, end of selling, unfinished business. I was the first one who actually discovered things like that, such as unfinished business was, we called it openings at that time. We called cappings. We discovered cappings. I discovered traps. Traps are very common until today. We use them for quick scalps. We call them nowadays knife trading. Anybody here that is in the room daily with me, they would know what I'm talking about. Point of controls, we still use it. However, one thing I want you to be aware of is that this tape here, the bid and ask ladder, will not give you a lot of information to depend to actually base your trade on. It's very fragile thing, and by that, let me show you what I mean. Let's look at here. Let's look at the actual bid and ask ladder, and let's look at a bar. Let's look at, well, although it's slow, but let's look at, for example, here, these bars, these numbers, 0, 12, 42, 4, 2, 0. This was capping. We called it capping, the 2, 0. This was capping, capping. But these numbers, what do they mean, really? What do they mean? Do they mean much? No, but a lot of people are fascinated by these numbers. They don't mean much. Why? Because you cannot depend on a number like this to trade. However, let me show you the idea behind what I discovered in terms of using volume profile. Look at these bars. These are a few bars. Okay? And let's look at the volume profile associated with them, the volume associated with the bar. And I'm not talking about just one number here or one cell. I'm talking about, what's going on? It's just rolled over. The crude rolled over, that's why. I'm talking about this whole bar, for example. This is a picture. This whole bar and what volume is associated with. If I show you this bar alone by itself, it doesn't mean much because the volume associated with it is going to be just this much volume associated with it, and that does not give you any indication of where the market is going. However, I'm sorry, where is the volume profile that I was looking at just now? Just give me a second, folks. It's going to come. Okay. If I look at the volume profile associated with it, and I'm bringing the volume profile from the side, as you see here. Now, this volume profile, as you see, is reading whatever you see on the charts. So you don't have to go with a quick computer eye to read these numbers anymore. You look at the volume on the side and you realize, for example, 5542 was the highest volume throughout the screen. See all this line here. You folks see my cursor? Now, let me bring more charts in and see what happens. The more you bring in, the more bars you bring in, you see the volume profile on the side accumulating. That's just an example, and this volume profile that we have, it's available to members. You can actually reduce it, as you see here. You can sharpen. Look, you can sharpen. You can smoothen, and you can sharpen as well. See that? I like it sharpened edges. I don't like smooth, but it's a preference. Everybody prefers differently. However, my point is, folks, my point was and still is, when you have people trading using a bid and ask ladder, I was one of the first people who've done it, first traders who've done it. I introduced this back in 2005 and 2006. But I'm telling you, it's very fragile. However, if you put these bars together, now you have more view. You know, for example, instead of reading these numbers within the bar, you would know that in this area, you had the highest volume. You see this area? This is red box. And you don't need to read individual numbers, do you? No. You had high volume here. You had low volume here. Almost no volume here. And the more data you bring in, as you see, the more vivid the market becomes. Now, all of a sudden, these numbers don't mean much, do they? You don't even see them, the numbers on these bars. Okay? Now you notice how the market has, you see here, doesn't matter if you read these numbers. It doesn't matter because you can't see them. But look at the volume associated with it here. The volume was very thin, at that time, even though the market came down, it went back up. When the market was coming down, it failed to create any volume profile, any interest here. So there was no interest. Usually the market is attracted to where this interest is. And you notice there's a lot of movement around this area because of this high volume area, right? Now, it doesn't matter if you read the numbers on these bars or not. Bottom line is the volume profile on the side, as you see here, will give you a complete picture of the market. Make sense? And if you depend on the numbers on the bid and ask ladder, you will not survive much, really. I mean, these numbers change dramatically within milliseconds. So, bid and ask ladder or the tape, we discovered the end of buying, end of selling, unfinished business, capping, traps, point of control, etc. One of the things that I discovered was a trap, and let me show you an example. For an example, we used to trade that, but now we changed it to using the same methodology, but with volume profile. Look at this number, and I did not prepare this. This is, I just saw this. Look at this. High volume sell right here, and it's very dark. Okay, and you see there's nothing above it. Usually people will, here traders or market makers will give you a huge amount of buyers. For example, in this example, a huge amount of buyers. The reason why they will trick you using this method, the tape method, is that they want you to buy. They would make you look at this dark green and you would buy. You would buy, let's say, 2 contracts. The other person will buy 2 contracts. The other person will buy 3. All of a sudden, there are 500 contracts in the market from novice traders. Novice traders will put 500 or 1,000 extra contracts into this market. Why? Because they see this. People depend on these numbers, on very fragile indicators. Mind you, there are other indicators that I don't even look at anymore, or never looked at it since 2006 and 7. These are we'll talk about that. But if you put 1,000 altogether, the market puts an extra 1,000 contracts into this buying. You know how easy that will make the high frequency traders and the machines and the trading bots to execute their 1,000 shorts, because they want to go short in this market, for example. So for them, instead of them getting filled within 5 to 20 ticks, they will get filled within this area because you already gave them that opportunity. Does that make sense, folks? Am I too advanced for some of you? I bet most of you understanding what I'm talking about. It's about choosing the logic of the market. Most people do not, they are not logical about trading. And then comes the volume, the market profile. Do you understand this? Anybody understand this? I don't. This is your typical market profile theory, which I really don't understand. Therefore, I had to come up with something new. So what I came up with was this beautiful looking volume profile indicator. It shows you where the interest is. It shows you how the market moves. And you would notice, of course, this is not after the fact. This is during. This is during. For example, and if you see this, which is something we do, I'll show you. This is a Slack window. Slack is a signal delivery method similar to Skype, any messenger, but this is now, it's new, it's recent, it's advanced. You can have it on your cell phone, you can have it on your machine, trading machine. But this you will receive my trade signals, you would receive my ideas, you would receive my, point of interest, commentary in the market. At 1:04 p.m., I said YM has a big resistance, YM, which is the Dow, between this price and this price. But I didn't call a trade. I just said big resistance. It could be the top of the day. Okay? Could be the top of the day. Folks, if I show you the YM, and this was at 1:04 p.m. Where is the YM? This is the YM. This is actually the Dow. If you look at 1:04 p.m., it's right here. This is 1:04 p.m. Right here. See the bottom, here. 1:04 p.m. is right here. I said this could be the top of the day. It actually, I wasn't wrong because the volume profile. Of course, I'm not looking at this volume profile. I'm looking at a bigger frame. It showed me, and look, the market dipped. It went up slightly, but then since then it's just down. I don't have data connected now because I want to have more powered, and so I could do the presentation. But see, since then it came down. Now that was not a tradable signal. Why? Because the market today, everybody's. I mean, I don't know if you traded or not, but it was bad. Okay, the market was very bad. We'll have that question maybe. Kurt, let Dimitri answer it, but I'll answer some more questions after. But that's a good question. Sorry. Now, here is the main idea behind this webinar. I bet almost all of you use indicators. Okay? What kind of indicators do you trade with? Please, let me know. This is, I can see your answers here. And if you could tell me what kind of indicators do you use? And this is where you will understand this whole method. MACD, MA, okay, channel, trend lines, okay, very good, Bill. Rock, very good. CCI, RSI, okay, excellent. Excellent. Now you can use all those, but believe me, if you put them double stochastics, okay. Now let me show you the difference between, in a nutshell, the difference between volume profile and all the other indicators. Why volume profile? This is the, for example, I have the crude here, okay, and this is the new contract, and here's the crude, and let me just show you. This is the volume profile associated with it. You can, as I said, you can smoothen it, you can smoothen, you can sharpen, you can smoothen, okay. It's very dynamic. You can reduce, whatever. Now, this volume profile on the side gives me a few things. I'll explain. Gives me details. What are these details? This volume profile gives me details on a few things, and let's put it on the side. It tells me what is a continuation zone, meaning when the market touches a level, gets into a level or an area of volume, that's a continuation zone. It could continue all the way up to the top, to the above level. And this was the reason why I just told you on the YM at after 1 p.m. Eastern my time, I said it might be the top of the day, because this continuation zone that YM went through all day, YM was going just up, 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 up. It was based on the daily chart, At the end of that volume profile, which was created in the past, which means it's not, I'm using dynamic, the now information, not anything previous. It was reaching that top of that continuation zone. So at the top of the continuation zone, it usually follows by a zone that we call rejection. And that's in red, as you see here, rejection zone. Let's call it rejection and put an R. So that rejection zone, it could be a few ticks span or it could be 20, 30 tick span. Therefore, you notice that the YM went up to the top of the continuation, came down, and then it went up again, and it came down after. So this whole area was rejection. So now this volume profile tells me in details the continuation and the rejection. Now, within this continuation zone, you can always find things, we call them, we have our own terminology. I've been doing this for a lot of years, folks, and I developed my own terminology, and the students learn that, and we talk about it in the room daily. And when we say we have a hiccup, within this continuation zone, you will have minor rejections. We call them hiccups. And these hiccups could be perfect if you're long from the bottom of the zone, taking profits in these hiccups, or taking reversal trades as scalps. Okay, but let me show you. Let me in an example. Let me show you the difference between random trading. Okay, this is very important, please. Random trading, which almost everybody traders does. Almost everybody trader does random trading. Okay, and trading on the logic of volume profile. Some of you said the trend lines, MACD, double stochastics. Let me give you, anybody trades Fibonacci's, because that's the easiest example. Fibonacci is something that even if you trade a channel, sometimes you would use Fibonacci numbers for it. But let's assume that you are looking for I just stopped for a second because if you're trading the euro is about to reverse very soon, folks. Just saying that. Okay. Now you're trading. Let's say the euro. Okay. Euro is going up. Anybody's looking at the euro as we speak? Euro's going up. Euro's going up. Euro's going up. Now you're looking for a long. For example, you're looking for a long, right? It's going up. Now, how many of you would choose a long, for example, after retracement? A lot of you will choose a long from a retracement. Now, let me be a little bit more specific. Let's say I am using, for example, Fibonacci retracements, and you know Fibonacci retracements are, some of them will be here. This will be probably a 30 or 38%. Sorry, 38%. Some of you will trade 50%. Some of you will trade 62%, etc. You have to understand 38%, 50%, 62% from what? From the low to the high, for example. Now, however, the market, the price keeps going up, and these Fibonacci numbers will change. But regardless, that's not the point. The point is, you decide to buy from 38%. Very simple method that I will explain, and it will show you how my system, my volume profile works. You would wait for the market to come down, and 38%, you take a long. All of a sudden, maybe it goes up a few ticks or a few pips, then comes back down, takes your stop loss, and bounces from 50%. You say, no, next time I'll trade from 50%. Next time comes, comes to 50%, it stops you out, comes back down to a little bit lower, and then goes back up. You say, okay, next time I will trade from 50%, but I'll have a bigger stop. Common? Next time will come, comes here, comes to 50%, you put a stop loss bigger and comes back lower. Now all of a sudden you're frustrated, you take it again from 62% and keeps coming down. It happens, we cannot deny that it happens every day. Especially, oh, by the way, did you watch the euro? Did anybody just watch the euro, folks? When I told you it's about to come back down. Do you see the reversal on euro? Did you see it just now? See how it came back down? So the reason why folks you trade randomly is this: you don't understand, you don't see, not that you don't understand, you don't see. You will understand if I show you, but you don't see the volume that is created when the market went up. And previously when the market came down, for example, and then it went up, it created levels on the side. One of the levels was a continuation zone. Let's say from here all the way to here. And below that, there was a continuation, a rejection zone here. And after that, there was another continuation zone that looked differently, and there was here. This is a very good example. And above this continuation zone, there was a rejection zone. Okay? Now, first of all, I will not expect this euro or whatever we're trading to come back down now, because we are still within the continuation zone. Okay? Now it went up to the rejection. Okay? Now this is exactly when I said just now, a few minutes ago, and Bernard, you're not a student, but you said you noticed the euro coming down, and it coincided also with a flag rectangle downside, which maybe you use an indicator. So we will talk about indicators, how to use them within this volume profile if you love your indicators. Now, I said the euro is going to come back down because it touched this reversal level right here, came back down. You see how it came back down. Now, let's assume we're not talking about this incident now. Let's talk about trading. Now, are you going to trade long here? Anybody? No. Why are you not going to trade long here? Because you are still within continuation zone. So if you failed, or if you did not take a short from the top here, you will not take a long from here, because you know volume is continuation all the way to here, right? So you will wait for it to come down, 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 down. Are you going to take a long from 38% retracement? Of course not. We are still at the continuation zone. Now, doesn't matter here if it's a 62% or before 62%. No, it doesn't matter. You see, we did not get to 62%, but there's your long. Now, the main question is, what if this rejection doesn't hold? Most likely, first, especially if it's a first touch on a small scale, it will hold. Sometimes in a bigger scale, it might just poke and then poke back up. However, this is my best level of entry. Now, there's no magic to this. The answer is, what if it doesn't hold? It will hold, and most likely it will hold, and you will experience it if you join us, and you will see it for yourself. But let's say if it doesn't hold. Now, instead of trading from here and having stop loss 50, 20, 30 ticks, you have traded here with a stop loss of 4 ticks. Why? Why 4 ticks? or 5 ticks or 6 ticks. Why? Because if you chose to trade from here, do you think your stop loss will be at the blue line randomly, or it will be at the green line here? Your stop loss will be at the green line. Why? Because as soon as we come into this continuation zone, even the blue line is going to get hit. So why do you want to risk 10 extra ticks? Here's the main thing that most people don't think about. If I save you using this method 5 ticks on a stop loss, just on one contract, times $10, times twice a day, times, let's say, 5 days a week, times 52 weeks, because that's for the year. That's $26,000 you saved on stops. That's only by saving yourself 5 ticks extra per each stop loss. That's being negative, but that's talking about a stop loss. But if you are patient, these rejections, they have a very high percentage of giving you at least your first target. And even your first target, folks, your first target, when the market goes up, remember we talked about hiccups. When the market comes to your rejection zone, you take it. Your first target will be on your first hiccup. With this continuation will be full of hiccups, of course. You see the market goes like this. You take your first target, it comes back down, or it might just continue here and then goes back up. Therefore, your stop loss is taken, but you already took your first target. So the stop loss will not hurt you. This trade will be a small profit. But let's say, okay, goes up, you take your first target, first hiccup, because that's all will be vivid in the volume profile that I will teach you. Comes back down, takes this, and then goes to the next hiccup. Hopefully it will break it and continues up. Now, doing it visually like this is easy, okay? I'll have to tell you that it takes time and it takes a lot of focus and education, but once you learn it, folks, it's something easy. It's not hard. Anybody here is a student with us? Watch this. Every day, this is the new contract on crude. So the volume is not the best yet, right? Especially now being in the evening. And I don't have data, so I canceled my data. Watch this. This is the daily chart. Okay, this is the daily chart that you see. Let me add more data to it, please. 1 second. Meanwhile, we trade the gold. Here's the gold. And let's look at the gold until we get that crude. Look at the gold and look at the weekly chart. For big swing traders, okay? And you see how the volume profile works. This is the volume profile on a very big scale. Now, from the big scale, we scale down to daily. Look at the daily chart. Now, this daily chart will give you more vivid, better than the previous weekly. You can draw your lines and you can establish. You notice how the crude went up from here. You see these levels, you see these levels. All of these will be detailed. Now, even coming back down to a tick chart. So basically what we do, folks, we anticipate the market. For example, we look at the big frame chart, okay? And we say, okay, we have, for example, we have on the weekly or the daily, big daily chart, we have support in this area. Support, let's say, on the crude. So when we have this area support, we expect the crude to go back up, to rise back up. But this area is on a daily chart, meaning it could be a 20 tick span. 20 tick span. What you want to do is here, for example, we have, for example, I'll just give you an example. We have a level, for example, here. Here, for example, we say this area on a daily chart is a rejection. But do you see this area is so condensed and it's not detailed. So what would I do? From that, we anticipate. Now we have something called anticipation. So we anticipate the market, anticipate, and then for us to confirm, we're going to switch to a 987 tick chart, for example. This is a small chart. For us to confirm, we will switch to a small chart, and you'll see how the volume profile goes, reads all the bars. We will look at two legs meaning two waves, or at least two waves, and we will find out, we will pinpoint the trade in, let's say, the long that we chose, and that's just an example, into this level, for example. And I would say you will have a long between these two lines. And one of the examples we had today was nat gas. Where's my nat gas? Today, and this was a question asked in the room, in the trading room. They said, what is your nat gas rejection? Because I said nat gas is going up soon. And in the room today, I did this rectangle. I said nat gas has a rejection zone in this area. It means it bounced from the top of it. I don't like the top of it because it already bounced there before. I was looking for a dip lower. So I missed this trade just because, you know, it did not come to the middle of the box or to the bottom of the box, because I want the least risk available to me. The least risk meaning the least loss that I would experience, just in case if I get stopped out. Now, that being said, sometimes I will miss trades. If the market doesn't come to the level that I'm looking for, I will not even trade it. And sometimes we'll just stay for hours without trading. Patience is key to this, folks. You have to understand. So when the market comes to the anticipated area, such as this, in the 20 ticks, we will switch to a small chart. Now, instead of we anticipate the level, which is, for example, here. Now we confirm. We will break down this level into a smaller chart, and we will confirm. We will have a smaller level within, let's say, 10 ticks. Now, this is the true rejection that we have. You understand, folks? So it takes time, it takes education, it takes learning. So if you are struggling with your trades, you can't see the market's direction, entries and stops. Do you know your stops ahead of time, or you have a set number of ticks for a stop loss? Usually you have a set according to your ATM strategy, and hopefully, you know, you accept the loss. Most people don't accept losses. They keep trading, keep trading, keep trading. If you get stopped out and the next trade doesn't make sense, wait. That's why my students in the room, if anybody's in the room with me, please let me know. You know how patient we are sometimes, and they learn from that. They thank me for that. They say they learned a lot, because there's nothing. If there's nothing, you don't have to trade. You don't have to sit in front of your computer, in front of your trading station, and decide, okay, I have to trade. I cannot be wasting time. No, it doesn't work like that. If there's no trade, there's no trade. Wait. So if you cannot see direction, entries, and stops, you need to learn volume profile. And if you're about to quit, or you lost your taste of trading, this is the chance. Join us. Trading is I would say an art, and not too many people can do it. But if you think you need to learn it, this is the time. Support resistance, continuation zones, rejection zones. Sometimes the market will shoot up without any retracements. Do you know why? Nobody knows unless you see the volume related to it. You have to learn how to trade with this least risk amount available to you. My mission is to strip all these bad habits from my students, and I've been doing it for many, many years, folks. And install not only the knowledge, but also the attitude towards the market. The methodology will force you, and I will force you to be patient. You will be with me every day on a daily basis. And I will force you to learn this because, you know, I'm with you. You've seen my charts. You're looking at or you're listening to me. You're asking questions. You need to learn what a smart stop is, which I explained a little bit in this presentation. You need to learn how to wait for the trade. Okay? So, whether you're trading Forex, futures, CFDs, ETFs, volume profile is key. Now, some of you here, Kurt asked, TTI tool effective to trading. He was asking, probably you were asking about Bitcoins maybe. I never seen a chart of a Bitcoins, but any chart that has any instrument that has volume, Forex, futures, options, you can trade. I have a CFD charts, a CFD platform on the side. I look at volume profile on it. It works, same thing. Don't make things complicated. Don't do that. Simplify everything. Now, if you choose to email me later to tell me about your trading history, your needs, requirements, I'll be more than happy to help you. Let me explain a few things about our what do we offer. This is very important. When you join us, if you join us, I have a very special offer for everybody today. We call it Christmas offer, but this is not the offer. Now what you see is your members area. The members area, once you access members area, folks, you see how it's segmented, level 1, level 2, level. This is years of education. We have also some education about options. For example, you get into level 3. Level 3 of education. Crash course on volume profile. This is your bread and butter. This is where, you know, you'll understand volume profile, how it works, what is volume, what is continuation, what is rejection, what is stops, etc. And it has also many other videos. We have tens of hours of video education available to you. As a member, you will get the trade room links here available to you. You see trade room links for November. You can join me daily. Okay? So you have everything in the members area. As a member, you can enjoy all that. Also, we have where's the indicators? Trade rooms, extra indicators. So you have the indicators. Now let me talk about a couple of indicators before I introduce you to this special offer. Let me show you. Couple of indicators that I have. Here. One of the couple of indicators that you can enjoy is, you know, the DRL, dynamic. Do you see these lines on the side, on the bottom here, here, here? This indicator, it's a very important indicator. This is an indicator where it was developed and it was very expensive. It's a combination of many rejection indicators. But It's simplified. These indicators are compatible with Sierra Charts and NinjaTrader. How many of you use either Sierra Chart or NinjaTrader? Please answer me. If you are using other charts, other platforms, you will have to get at least a sim or a demo Sierra Charts or NinjaTrader to be able to use our indicators. Now I prefer Sierra Charts. Very simple, very easy. DRL indicator, for example, you see 45-minute here, 60-minute, 120-minute, 180-minute. For example, 180-minute chart. This is one. I don't know how to. It's very complicated, but it's very simple in terms of putting it on your chart. But deep inside this indicator is a very complicated indicator. 120-minute chart has 6 different indicators, 6 different reversal indicators. When at least 2 of them match, this will show up on your chart like this. So this is a rejection indicator. Do I trade it standalone? No, I have to combine it with the volume profile. The other indicator I have is besides the volume profile, as I said, which is you see, is the power line indicator. So one of you said he traded trend lines. Now power lines are different, are much better. Power lines are, you see how this power line worked? It rejected this move down. How this power line worked? Power lines are connecting these dots, and these dots are a couple of things. Fractals, and on the tape you have the end of buying, end of selling on the tape. You remember we talked about the tape or the bid and ask ladder? So when you have end of buying, a sell like this, end of selling, a sell like this with a 0 on the bottom, it will combine with this dot, and this will be connected. And once you connect those, you will have a very powerful rejection zone. Okay, and that we can use in combination with volume profile. Now I don't use any indicator, even though my indicators are very powerful. I don't use any indicator unless it's combined with volume profile. Watch this. Watch this power line. See this power line? This power line here. Sorry, this one here. How it rejected, and this one how it. This was a combination between this dot and this dot, and see how it ended up rejecting this level. So that's just one example. Okay. So this is a full package that you can get and enjoy. And finally, we talk about the offer, and I will answer questions. The website is here. You can go through it. You can go through resources. The website is thetraderinstitute.com. And you can go to resources. Education is important. Dimitri, if you can post that education link, please. Education video link is or page is very important. Why? Because it has more information about us. Look, one of the main power volume profile besides this one that I just did webinars is this one. I have a very important adult ADD video that was, I think, recorded many years ago by Dr. Kenneth Reed. I love this video. You need to watch it. There's another old volume profile video here that combines tape with the volume profile. So please, price magnet, what it is, our method. Please enjoy these videos. Okay. Well, I'll answer that, Tom. We have recaps here. We have funding. If anybody wants to get funded after learning this method, after becoming a good trader, you can actually use other people's money by using, for example, Top Step Trader, and we are about to add another one into our website, One Up Trader. So we'll have 2 funding companies. Okay. Now, this is the offer that we have, and I will answer your questions. The offer is very simple, folks. I used this typical offer was you come to the trial. We used to do one day a week trial, and then you join. After you join, you will get your offer. You will join for 6,000, 7,000, 8,000, whatever the offer was. This offer is different. Why? I decided to have a very special offer for this time of the year and this market, and all of you understand these markets have been horrible. So I want you to sit back. I want you to learn this, and within the next couple of months, just sit back, learn, join us, learn from us, and then hopefully in the new year things will get better in terms of market. Market is very hesitant to the politics in the world. It has nothing else is affecting it other than the politics. It's the fear in the market. So the offer will probably help you, and if you like it, you can join us. The offer will include the video library, the comprehensive education, access to the education, all of it, the indicators, the volume profile, the power lines, the DRLs, the price magnet, learning everything, the education about smart stops and daily room. Okay. Full access to members, access to the members area. You will have the morning session from 8 to 12 every day. Of course, some days if I'm sick, it happens every now and then. I will keep it just on Slack, and then afternoon and the evening you will have Slack. If I see anything, I will Slack. I'll put it on Slack where you can receive it on your mobile. That is included for 12 months. After the 12 months, the daily trading room and the Slack will be only 30, not actually 12 months, 14 months, Dimitri. 14 months, because the payment plan is over 14 months. If you can fix that. After the 14 months is over, it's only $30 a month. So that will be just for the daily live trading room. The complete set of indicators, you'll receive them as you see here. So basically a comprehensive membership. Again, 14 months here, please. In summary, this is the actual pricing we had for the membership if you break it down. But we have a very special offer. When I say no risk, full week, you pay $2,500 now, and then you get you pay $374 a month after 2 months of the first payment. So if you pay now, but hold on, there's something about the no risk I will mention. If you pay the $2,500 now, you will not pay anything until 2 months from the first payment. After the 2 months, there will be a payment plan of $374 for 12 months. So altogether, the plan is 14 months, a year and 2 months. Now you will get your money back, the $2,500, within 1 week. So if you buy today, as of tomorrow, you will join us in the room. Okay? And you will join us for 1 week, five trading sessions, 5 trading days, 1 week. We don't trade in the weekends. So during this week or until the end, you can say, okay, this is not for me. Give me my money. You will get your money back. Now that's also in an agreement, because once you buy this, once you join us here, I will send you an agreement. That agreement states the same. So if I don't abide by that agreement, I do. I mean, I've been doing this for many years. Anybody who followed the rule, they joined us and they did not like it, they can get their money back. The only thing I want you to understand that You are not allowed to access members area. You are not allowed to access this area, folks, when you join us and while you are trying us. Join us meaning you join us on Slack. You will have access to Slack and you will have access to the daily room. You will not, I will not send you access to this anyway. But if I send you access on day 4, day 5, assuming that you like what you see, and if you access this members area, it's up to you. You cannot act, you can choose not to access it. Okay? So you will have 5 days to get your money back, or 1 week basically to get your money back, which is common. I've done it. I do it all the time. Okay? And then 374 a month for the next 12 months. Now, the other thing is that let's say you joined us for the $2,500, and after 2 months, 60 days, something happened. You got busy. You don't want to continue with the 374. You can stop it. You can email me, or you can go to PayPal yourself. Cancel it. Cancel the payments, the rest of the payments. Keep the education. Keep the indicators, all of them. They're worth more than $6,000-$7,000, but keep them, and then come back and join us later with this payment, the 12 payments. Doesn't matter. You can keep the education, you can keep the indicators. I'm not going to take it from you. Once you pay this first payment, the education is yours. The access to that members area is always yours. I will not take it from you, and the indicators up to date are yours. So if we create a super indicator or another indicator 6 months from now, that's not yours. Okay? Any questions about this? This payments you can stop if you, let's say, you get busy, you just don't come to the trading room anymore. But you will enjoy the education and the indicators. And if you want to come back, you can resume these payments. Make sense? Now, the questions I have. Okay, I'm looking at you. What else do we have? Simon, is your profile, does it present several? Oh yeah, the profile, if you look at, let's say, profile on gold, weekly, this can go 1,500 days back, especially on, that's why I say I prefer Sierra charts, because you can go big time. You can go 1,500 days back without having a hiccup, especially if you have a decent computer. With NinjaTrader is a bit hard. Tony is saying, so many vendors say you can do this, but send me the money first. Nothing happens after that. Why am I the difference? First of all, I've been doing this for a long time, Tony, and I'm giving you money back guarantee. So if you don't like what you see, just get your money. However, when you come into this trading room with us, don't expect magic. Don't have that mentality of, I want to trade, I want to make money now. No, you sit back and watch what we do. What we do sometimes is boring because there's nothing in the market. There's no excitement. So it's not about coming into the room and having some exciting. It's logical. We say, okay, we have a level here. You'll see students asking questions, members. Some of them are very advanced. Some of them trade options. Some of them are trade futures. Some of them trade, but all of them abide by the same rules. Okay, so you come in. You see if it's logical, if it's for you, if you're looking for something to learn, to make you understand the market instead of just switching from a system to a system. This is the only way to read the market logically. Everything else is random. Okay. Tom is asking, frankly, looking at your charts with volume profile, it just looks like catching tops and bottoms approach. Well, this is a presentation, Tom. I know you don't mean any disrespect, which you mentioned. I appreciate that. but this is a presentation. This is not a teaching lesson. So once you get into this, there's a lot more. Every single color here means something. Every single zone means something. Okay, what I showed you was a simplified method, Tom, just because I want to make things simple for you as an attendee. Okay. Virtuous, I don't know. Tony's asking. I don't know, Tony. No, I don't know anybody else. Well, a lot of people, I'll let you know, Tony. A lot of people has taken my education, and some of them went on their own. I doubt they would be able to improve on it because they are not me. But this method, I've improved on it for many years, and every year I improve and I add new things to it because I discover things, and when I discover things, I make them available to my students. Okay, so I don't know, but both use the same system. This is something I discovered and I built on for many years. Go long here, go short here is different for new traders. Well, no, my job will not be go long, go short. My job, as I said, you will have access to a comprehensive members area, and I will be your coach. And this is a permanent membership. This is not something that you buy an indicator or something that if it doesn't work, that's it, you lost your money. No, you're with me. As I said, we have students that they've been with me since 2005. Okay, you can take a break, come back, as long as you learn how to look at the market. And honestly, you have no choice but to learn, whether from me or others. If you want to become a trader, you have to learn. Okay, you have to learn, and there's nothing more logical than learning the volume of the market, because that's the only way to read the volume. And again, you join us, you come into the room, you ask the students. This window of questions is visible here, like this. This window, the window that you see in front of you here, this is what you will see during the trading room. So anybody asks questions, it's visible to everybody else. Okay. Edwin, oh, OneUp is a funding company. Edwin is a member. You're the same Edwin, right? OneUp is similar to One Step Trader. Yeah, similar to Top Step Trader, and we're gonna add it to the website. We just made a deal with them, OneUp, so you could enjoy if you want to have a funded account. Is my yes, it is, Tom. It's relevant to the next day because, as I said, let me give you an example. This volume profile, whether it's now or not, we know there is a continuation zone that's not finished yet. So it is, yes, Tom. It is relevant. That's why volume profile is not a lagging indicator. It's the now and what's going to happen in the future too. Why? Because remember we talked about here. You have a zone, and for example, there's another zone. Sorry. There's another zone above it. And let's talk about the euro. The euro, if the euro comes back down to, I'm talking about euro US. I'm not looking at the 6E, but if it comes back down below 1.178, which is here, for example, it's going to continue down. So that is relevant to the next day. So imagine today comes back down and it's here and the market closes. Most likely the next day is going to maybe give you a spike and then continues down all the way here. So it is relevant. I hope you folks enjoyed the webinar. The offer is available until Sunday night. Again, Slack is part of it too. As I mentioned, I don't know where the YM is now. I logged out. Thank you, Edwin. But Edwin, you received this note. Big resistance here on your Slack, and here's what happened on YM. Look at the YM dip. Oh, this is the TF. I'm sorry, or the Russell. Where's the YM? I'll find it. Anyway, the YM. Here, it's down. Okay, but it's part of your education. Okay, so if you have any questions, email us. Let us know. Meanwhile, if you join us, you will be able to get your money back after a week. And hopefully everybody enjoyed this. Question, so what you are presenting via volume profile is where the buy orders versus sell orders determining market price. No. You will see that within volume profile. You will see the high volume nodes. You will see or nodes. You will see where the demand is. But there's a more comprehensive, Tom, more comprehensive view to it. Okay, we'll show you the direction of the market. We'll show you the rejection zones. So it's not only one price. Make sense? There's a lot to comprehend. There's a lot to understand. It's really not something that you will understand within one presentation or one hour. This is a very intense education. It takes hours, a couple of weeks of learning. Just like I showed you, there's a members area that has many videos, and then there's the daily trading room where you can ask questions. Okay. Hope everybody enjoyed the session. If you join us, we will send you an agreement. The agreement will state that you can get your money back within a week, no questions asked, and hopefully we will enjoy a good trading relationship. Thanks, everybody. Have a great day. Thanks, Dimitri, for helping. Tom, John, thank you. Edwin, Tony, everybody, Bill, thank you. Have a good night, and bye for now.